So again, tariffs are on. Confirmation from the American president a short time ago. The markets, as you saw, in the red, dropping earlier today, then a little more dramatically after the news. Joining us to talk about all of this, Jason Daw, head of North American Rate Strategy at RBC Capital Markets. Thanks for joining us today. Appreciate you coming in.
Thank you very much.
Let's start with the potential impacts, I guess. We know some of that as far as the markets go, because we're seeing that big streak of red there. How bad could things get?
Well, from a market standpoint, I think, one, nobody was fully expecting across the board large tariffs to be put in place. So there's going to be some adjustment that's needed in financial markets. Canadian dollar is probably weaker. It already is today. That probably continues for at least a few more days till we get some clarity on how long tariffs could be in place for. The equity market's down and Canadian interest rates are lower, and the market's giving a higher probability to the Bank of Canada lowering interest rates at the meeting next week.
Okay, so let's talk a little bit of bigger picture as far as how do we respond, right? What do we do? How can Ottawa somehow make this a little bit better, considering their 25% tariffs across the board, 10% on energy?
Well, from a tariff perspective, they're already talking about retaliation. We knew that that was coming. And I think from a monetary policy standpoint, the Bank of Canada does have room to lower interest rates in the face of tariffs. And from a fiscal policy standpoint, which is probably underappreciated, there is scope for fiscal policy to occur both at the federal level and provincial level to cushion the overall blow from the tariff perspective.
What does that look like? Does that look like support for sectors that are hardest hit? Because if it's across the board, we know the sectors that are vulnerable, but everybody's going to hurt.
Yeah, there could be support for households. There could be support for businesses. You know, prior to today, the government did talk about COVID area type of stimulus, and it would be support for households and businesses, not at the same type of scale that we saw during COVID. But I think our fiscal position definitely gives us room to provide that to cushion the overall economic impact.
So, Jason, when would that work? I mean, how long do you wait? As you mentioned, we know the tariffs are taking effect. We don't know how long they're going to be in effect for. It's not clear if it's still some part of a bargaining tactic by the U.S. president to get at something else. Given that, if you're the government and you want to, provincial or federal, and you want to support, when's the right time to weigh in?
Well, I think the message is we do have time, right? The impact from tariffs is not immediate. The full effect will be felt probably more over a 3 to 6 month horizon. So there is scope to wait a little bit. But once we start getting into that 3 to 6 month type of period, then the support should come, because it will probably be needed in general at that point.
Okay, so a little bit of lead time there. What about for interest rates? Do they wait for a little while for one session to pass until they see what's happening, or do you expect to see a cut sort of sooner than later?
Well, I think from a fundamental perspective, if you look at the economic data in Canada, it's been pretty good over the past 3 to 4 months. The message that we heard from the Bank of Canada back in January was one where it didn't seem like they were necessarily inclined to cut interest rates at every meeting this year or even at the meeting in March. But with a tariff threat, I think it would be a little bit complicated for the Bank of Canada maybe not to deliver an interest rate increase in the face of tariffs that were just announced today. So as you saw, the markets move from around a 50-50 chance of a rate cut next week to almost fully pricing that in. So the risks are definitely leaning in that direction.
And do you see sort of a just smaller cut, or do you see something larger?
Well, I think overall what we learned from COVID was if you deliver too much monetary stimulus, if you deliver too much fiscal stimulus, and then tariffs get rolled back, you could have a situation that becomes inflationary later on. So I think from a policymaker standpoint, both from monetary policy and fiscal policy, they should really go at it at a very slow pace. So I would think that if the Bank of Canada was going to cut next week, that it would be more inclined to do a normal size 25 basis point increment rather than something larger.
Let's talk a little bit about the political situation, a different vein here, but we're in a odd kind of situation where we have an outgoing prime minister, we have a new Liberal leader still to be picked. That happened soon, but you know it's not in place now. And then we could have an election, and we just don't know if that election is going to come, you know, in a couple months from now as opposed to the end of the year. How does this factor into what's going on in your mind?
Well, from a timing perspective, it looks likely that there's an election in the May or June time period. And then probably shortly after that, then there is room for fiscal stimulus to happen if tariffs are still in place. But The overall political backdrop in Canada definitely complicates a number of issues. One, how quickly fiscal policy can be delivered, and second, just general negotiations with the U.S., right?
Do you worry about that then? Because you mentioned there should be some fiscal policy if the tariffs continue on. We have the leeway, but let's say we don't have an election right away, May or June. Let's say that gets held off until the fall or the end of the year. Would we be worse off as a result? Because we'd have a government, but we don't know how much follow through they'd have.
Potentially. You know, if we wait that long, then yes, the risk definitely increase from an economic perspective. The risks increase from a market standpoint because it's kind of unclear what we could offer the U.S. from a deal perspective to alleviate any tariffs until we get through an election period.
Can you talk to me as well about the provinces? We know some provinces have been much more vocal about what's going on in the U.S. than others have. Premier's also saying they're going to pull American products off the shelves at the local liquor stores, that kind of thing. What more do you see from them?
Well, there's definitely retaliatory measures, you know, as you mentioned. Fiscal policy is another one. You know, I think from a provincial level, it is, I would say, fairly limited as far as what they could possibly do. And I think a lot of the onus will fall on the federal government. And that's similar to what we saw during the COVID period also, where the spending that was put out by the governments, the majority of that was from the federal government rather than the provincial side.
But they have something they could pitch in.
Yes.
Got it. All right, Jason Daw, good to have you, sir. Thanks for